All right, last hot and heavy one for us to take care of today. Lumberjack Landlord here with his two good buddies, Dion and Mike Zuber. Guys, we've been talking about interest rates. We've been talking about the what if scenario. So let's talk about the what if scenario. 4%, 8% rates. What's the world look like if we're at 4%? Let's do that one first. Michael.
So this is like the number one question that I have going in, because again, we have a Fed that I believe is going to be aggressive, but at some point pivot or soften. We can argue, we have disagreements on when that might occur. But yeah, 30-year interest rates are going to be very interesting. I think what we learned here recently is if rates get sub 5, which obviously 4 is sub 5, the housing market's probably not going to be in a bad place, right? 4%. I think what we learned is 6% hurts, 5% feels better, and if we got to 4, I think the engine gets started again. I don't think it's crazy like sub 3, but yeah, I'm willing to say that if the 30-year mortgage got to 4% for owner occs, that housing would kick back up and it would not be in a depression.
Dion?
So this is the kind of predicting I like. I don't like the idea of thinking based on this data, rates are going to go to 8. Based on this data, rates are going to go to 4. I like thinking game theory. What would my plan be if rates go to 8? What would my plan be if rates go to 4? So I think this is a great topic. At 8%, I think transactions continue to crash.
Yeah.
I think prices don't. I think people still confuse higher interest rates with lower buying power and thinking buying power means where prices go to. There's too much institutional demand. There's too much investor demand. There's not enough supply. We've had record small, not record large, but record small construction for the last decade. So if rates go to 8, I think what becomes more important is finding the motivated seller. This is if I was trying to grow my portfolio, where I would start doing driving for dollars. Maybe mailers, some way to find, wholesalers, getting those off-market deals. So far, all of my deals have been from the MLS. I would still be looking on the MLS. That's possible to find a motivated seller on there. I would use the lumberjack strategy of reaching out to sellers and finding out the 3 most important things to them, figuring out if I could meet those to get the deal. If rates go to 4%, I would be ready for prices to continue to drive up, because that's going to bring out all of the people. I've got a friend, I don't want to call him by name, but Adam says, I won't buy unless prices drop. Well, if prices drop, it's because rates went up. And he goes, I won't buy unless rates go down. Well, if rates go down, prices are going to go up. In either scenario, higher or lower interest rates, I would adjust my strategy to what would work in that situation.
Exactly.
I would not sit back now and go, I think rates are going to do X, so I'm going to wait until they do it. That never works.
No, it never works.
No, you got to keep on doing the homework. So one of the things that I was thinking of is I think that there's one strategy I think that works, whether it's 4 or 8. So I think the subject or the seller finance deal works in both scenarios, because if the number's 8 in the market, I would think that somebody would probably be pretty tickled with getting 6.5 or 7% paper on their asset, because 3 years ago it wasn't anywhere near that. And I also believe that that works obviously with sub 2. I think that that's where where it starts to go off the charts with sub 2. I think on the 4 side, I think that they can list their property, they can sell it. But if rates are that and the market's really slow, again, transactions way down, seller finance, creative finance, sub 2. So I think sub 2 and seller creative financing, I think are going to work in both markets. And in one, the person moves the asset that there's nothing really moving in the market because transactions are way down, or the other side of it, which is nothing's really moving because it's at 8% and rates are super high, and they look at it and then this is an exit out of my asset. Mike, your thoughts? Because I know you've done seller financing a lot.
Oh yeah, I think absolutely. I think seller financing is a much easier discussion at 8%. Because I think, again, for me,
do you see
again,
them taking less? Do you see them take, so in that scenario, are they saying, I believe there's more inherent risk, I want 10? Like, is it reality that you think you can get them to take less?
Yeah, I think so. Again, for me, it would all be about the payment, right? That's how I would back into that, right? Your price, my terms, my terms, your price kind of thing. We can make that work. So kind of the 4 and 8 question for me is, we did let's just call it, we did 6.5 million transactions when rates were sub 4%. That was 2021. I think this year is going to be somewhere in the high 4s. If we got to 8, I think we would do like 3.5 million. So real estate would be, I'm not even sure what's worse than the Depression. Armageddon? I don't know. It'd be bad. If seriously, if the 30-year mortgage rate was 8%, we would do 3 million homes, 3.2. It would be bananas.
I think we still have a chance with what homeowners are not going to build next year, and with what's not going to get put on the market because the rates were so good for so long and everybody refied and is under 5. I still think that we have a chance at hitting a 3 or a low 4.
Oh yeah, for sure.
Annualized homes. And I think that is going to majorly give the market a case of the pukies.
Yeah. And again, that doesn't mean price falls. Back to Dion's
it doesn't.
Yeah. We have this weird supply and demand. The Fed broke housing, which really means they broke both supply and demand. Right? We don't have these forced sellers. And okay, if unemployment doubles, well, okay, it goes from 3.5 to 7. Sure, there's some, but what are they going to do? Rent? Rent's going bananas. Have you guys not looked at rent lately? It's not like there's a great option out there.
This is the comparison I think a lot of people don't make, is they say, well, but what's the rate? And they're only looking at the buy side of things. You're still renting. You're still renting. And where's that money going? What's it doing? It's going nowhere except for a landlord's pocket. That's the only place it's going. And I know I'm a landlord. I get it. But that's not an investment to me. That's spending to live is rent.
Yeah. But if we go to 4, I think we certainly get back to 6 million transactions. But let's not forget all the people who could have borrowed dry powder and refied that didn't. You know how many people would be doing that, right? We have record equity. There's a lot of people that could have done cash out refis that didn't and were upset, that may do it next time. So this could restart a whole bananas economy again. So again, 8 versus 4 is a vastly different outcome for the U.S. economy, for U.S. housing. And frankly, as I sit here today, I have no idea which way it's going to go. It could go either. It could stay at 6%. Sure. I have no idea. I have a plan, whether it's 4, 8, or 6. Exactly. It doesn't matter. Personally, I hope it goes to 8 because I think we need to clean out some crap and kind of rebuild.
Yep.
But do I have any faith in our leaders that they can? What our government and the Fed doesn't like is bad news. So if rates go up and things get really wonky, they're going to do first-time buyer programs and this, that, and the other thing. And I have no faith that we will suffer the true pain that we need to. So I have no idea it's going to be 8, 6, or 4, but it's going to be a wild ride to get there.
The best news is we all have a strategy, no matter what it is. It doesn't matter. This is the best part. Dion, closing thought.
Okay, closing thought. I'm going to try to make this a hypothetical because we're not this greedy. But I'm going to try to speak from the position of when the haters jump into the comments and they say stuff like, these guys are just trying to say values will stay up so they don't lose their net worth. When in reality, as investors, we would love the crash. We could buy more properties.
Yeah.
But as a greedy person, hypothetically, let's just say, pretend there was a greedy person out there. If interest rates went up 8, 9, 10, whatever percent, enough to really try to stop the economy, hard to buy a house, hard to find a house for sale. More renters means more demand. More demand means what we're having right now. I just had a tenant move out. I think I want all my tenants to move out because the rent went up like 40% and I'm low. And there was a line of people, like a line, an actual, almost a bidding war, I want to say, to rent the place. So have a strategy that works for whichever happens to the rates, to whether transactions go up or down. Either way, the person who owns the asset or is acquiring the assets wins. It's almost like we can have a shirt that says, I used inflation to get rich. Ask me how.
Only we knew where to find that shirt.
Yeah, I know somebody who has that on his wall right there.
All right, Mike, where can everybody find you, my friend?
One rental at a time, and we do a live stream 8 a.m. Saturday. Thank you so much.
And Dion?
right here on YouTube, Dion Talk Financial Freedom, where my mic works all the time, not like Lumberjacks who should listen to these videos and realize his works 50% of the time.
I have to keep
My
on
life.
hitting it. I have a kid going mental outside.
I think we appreciate you turning that down.
Yeah, I was going to say, I've heard words out of him that I've not ever heard before. I think 3 of them were made up. One of them I'm pretty sure is on the do not say list. But anyway,
I would say a few of them he heard from you.
right
Right after you got off the phone with the lead guy.
Yes, it was that. That's very correct. Yes, lots of colorful language soon to be brought to a YouTube channel near you. 11:30 a.m. Eastern time on Sundays, my live stream, Lumberjack Landlord. Thanks so much. Hit the subscribe. Make sure that you hit the like as well. We want this shared with as many people as possible. And guys, thanks so much for hanging out with me. Mike, I know you got to run, so have a great day, guys, and enjoy your weekend, although it's already started days ago. See you guys.
Ciao.